Bitcoin has now made six-figure prices feel normal. But if we look at the underlying on-chain data, is the network actually as healthy as it seems? Today, we're going to be doing a Bitcoin on-chain update, just looking at pretty much every single on-chain metric we have and just having a look at how healthy Bitcoin actually seems. I'm going to be honest, I don't really have too much of a plan today. I've just opened about 50 tabs and we'll go through everything one by one to see how everything kind of looks and feels. First and foremost, we'll start with the price forecast tools. And as we can see, as Bitcoin has rallied above $100,000, this, especially the terminal price value on this, has been increasing to provide exceptionally high target prices for the remainder of this cycle. Hopefully we don't need to look at the bounce price and CVDD anytime soon. But the terminal price, if we just go down here, it gives a little bit of an explanation on it. But down here is looking at the coin days destroyed, which is essentially a velocity metric, looking at the amount of BTC held, how long it was held for before it's transferred. And once we get the raw coin days destroyed, we're dividing by the existing supply and multiplying value of 21. And as this has historically provided great price prediction points for Bitcoin cycle peaks, it's definitely something we need to be watching throughout this cycle as well. And as we can see, this has recently surpassed $180,000, which is pretty exciting, I guess. And of course, this is improving and increasing all the time. So maybe that's our upper price target for the remainder of this cycle. And as I said, as Bitcoin's above $100,000 now, $180,000+ would indicate that we still have many more months of positive price action to go. And as this is constantly increasing, it's probably going to be closer to $200,000 by the time we get there. Looking at the Puell Multiple, which is looking at the daily miner revenue in USD denominated terms compared to a 365 or previous yearly average, we can see that this has increased following our post-halving kind of lull period where we had this huge drop off in miner earnings. Of course, the revenue was cut in half overnight practically, and we had this sustained period as we had some choppy consolidation reprice action for a majority of 2024 beneath a value of 1 as they were earning less than their previous yearly average. But we have now surpassed this. And one interesting thing to look, if I just reload the page so I can draw on the chart here, takes a second. What we can see is, well, pretty much from what I've drawn last time actually, this usually happens where we have this big halving drop off, this probably 6 months to a year period where Bitcoin has this choppy consolidation reprice action. And once we surpass 1 again, this actually indicates the latter stages of the bull cycle when we have these exponential price rallies. It happened here in 2017 and then in 2020. Into 2021, it was a very similar story where, of course, we had the COVID dump as well, which had a huge impact. But once we surpassed a value of 1 again and above that $20,000 key psychological level, that's when we pretty much tripled in price in just a few months' time. So we've now seen this, got above that big psychological level of $100,000, now consolidating a little bit. Who knows, maybe the next few months are where we have this double or tripling in price action, which, again, I wouldn't complain about. Next, we have the MVRV Z-Score, which is looking at the realized price and that relation to the market cap. So this is the realized price, or the realized cap specifically in this one, which is the average accumulation or cost basis of all BTC on the network. We can basically aggregate the previous transferred value, round that all up until we have this realized cap to see how much on average every single Bitcoin was assumingly purchased for. And once we divide that by the market cap, or divide the market cap by that, sorry, and then just standardize that data into a Z-score, we get the MVRV Z-score. And as we can see, again, historically, this has probably been one of the most accurate metrics we have for calling Bitcoin cycle peaks and bottoms. And we're looking relatively healthy. We're definitely not in oversold territory, overbought territory, sorry, where we're reaching these upper regions. I would say because we've, again, had not diminishing peaks every single cycle in this metric, I wouldn't necessarily be waiting until we reach this upper red region. I'd probably be looking, where I've marked on the chart here, at around a value of 6 before I start assuming we're in very overheated territory. But either way, we're still very much far away from getting to that area, even though we have recently surpassed our previous all-time high peak on this data point in March this year when we were about $74,000. So again, this is all looking like we are heading into the latter stages of the cycle. Once Bitcoin typically reaches these upper 3s and into 4 regions, this is when really we see these big price rises. Looking at something like the RHODL ratio, this is actually looking slightly less favorable for having huge upside potential remaining, but we can look at the previous cycle, which says we didn't reach this upper region. So as that was a double top cycle, maybe it muted the potential for each of these peaks. But as we're probably around this area now. It maybe is indicating that we are slightly overextended to the upside. The RHODL ratio, if we just go down here, is looking at the realized cap HODL wave bands, but specifically a couple bands within them, the 1 to 2 years and up to the 1 week bands. And we can see once we see that relationship of new capital coming in and massively buying BTC at potentially overinflated prices in relation to how much people from a year or two ago were purchasing for, we can see that usually indicates overheated conditions. But this is actually one metric, like I said, because the previous cycle was more of a muted double top, where I kind of would be expecting us to reach these upper red regions in this RHODL ratio. Next is the net unrealized profit and loss, the NUPL. To be honest, this is quite similar to the MVRV Z-Score, as it is again looking at the realized price, but just the raw ratio between that and the market cap. But this is almost mapping that towards investor sentiment at the time. So all the way from capitulation all up to euphoria and greed. And this is actually, again, looking pretty healthy. We're not above the previous peak we set earlier this year at around $73,000, $74,000, and definitely still far away from that euphoria and greed area. So definitely something that, again, points towards us having a lot more upside potential. So if I just go to the active address sentiment indicator, which is more of a short-term metric, this is also looking like we may be short-term slightly overbought, as this is looking at the network utilization, the 28-day percentage change in active addresses on the network and the 28-day price change. What we can see is once we have these deviations to the upside or the downside from these 28-day percent of address change bands, basically, once we move too fast to the upside and that's not supported by an increase in network activity, that has historically indicated that we're maybe a little bit overbought. But same is true for the downside. Once we have a huge stack sell-off, but we've actually got quite a lot of network utilization, so we dip beneath this lower standard deviation band. That usually indicates a short-term market bottom. But as I said, this is more of a short-term metric, and this definitely isn't looking bad. This doesn't give us any indication on how Bitcoin might look in the next few weeks or months. But as we've recently popped above this upper deviation and popped back below, we have had a few weeks of not as exponential price rallies, but really over the past few months, we ran from pretty much $50,000 to over $100,000 without really pausing. So just a week or two of some sideways price action is probably quite healthy. Next, the advanced NVT signal, which is looking at the network transaction value compared to the market cap. So if we just come down here, the MVT ratio is looking at the network value compared to the 90-day average of the daily transaction value on the network. And as we can see, pretty normal. This has increased massively compared to previous cycles, mainly due to the introduction of ordinals, just massively increased the amount of activity on chain. But again, looking pretty healthy. We're not seeing a small amount of BTC being transferred and utilized on the network, and we're not seeing massively inflated valuations due to that. Next, if we go to the long-term hold at realized price, in fact, I'm going to skip that one. We're going to go straight to the, where is it? Long-term holder MVRV. So rather than just looking at the long-term holder realized price, which is around $24,000 as I've filmed this, we can actually look at pretty much an MVRV Z-Score equivalent, but purely looking at the average accumulation or cost basis of longer term BTC holders. So if on average they've purchased their BTC at around $24,000, we can then kind of work out how high they're expecting price to go. So we can see now that this, it says it on this chart anyway, this is currently at a value of around 4.35, but as this usually tops out at values of 10 plus, what we can see is we can basically just do the maths backwards. This is currently at around $24,000, and long-term holders usually start cashing out once they're at a 10x on their position. That's currently pointing towards a Bitcoin price cycle peak of around $240,000, which I certainly wouldn't complain at. But we do have to acknowledge that we are seeing diminishing peaks once again in this metric. So maybe we don't quite reach values that high. Maybe we reach values somewhere. Again, I'll just reload the chart so I can draw on it quick. If we look at slightly lower targets potentially on this metric, so rather than waiting to 10, we do often see a little bit of a period around here where Bitcoin has a little bit of resistance. So if I just draw here, in the previous cycle, this is where we topped, found support before moved higher. In the 2020, exact same thing. So maybe around these scores here, which would be around 8, we'll say 6 to 8. So as this is around 24, we'll just round up $25,000. Maybe somewhere between $150,000, $200,000 is a little bit more realistic for where we could top out this cycle rather than $240,000, $250,000. But this metric is constantly evolving, so definitely an interesting one to continue watching. Next, if we look at the spent output profit ratio, this is probably one of the more slightly alarming metrics we have. as we can see a huge amount of profit taking place from people that have presumably been holding Bitcoin since considerably lower prices, now making probably exponential profits on their positions, especially as we reach that $100,000 territory. Now, one of the caveats with this is there is, of course, the argument that many people may be cashing out their BTC positions to instead go for ETFs or other derivative products, as they then don't have to worry about self-custody, and maybe there's the opportunity to lend more easily against that Bitcoin, so you can take out Bitcoin-backed loans rather than having to cash out and the tax implications that go with that. So definitely an interesting to be watching. And definitely one I'll be watching, especially if we see a continued amount of profit taking at these levels. That usually indicates that maybe we're not running out of steam, but definitely getting into the latter stages of the cycle, like we could see in 2020 and previously in 2017 as well. Once we get these huge clusters of huge amounts of profit taking, that usually signified at least the last few months of this market cycle. But as I said, there's a little bit of a caveat with this one, so I'll just be one to be watching without necessarily paying too much attention to as like a gospel truth almost. One thing that I think is better than the SOPR for that is the value days destroyed, which is looking at the coin days destroyed, which, as we said before, is almost the velocity of Bitcoin moving metric, multiplying the amount of Bitcoin held by the amount of days it was held to give more weighting to those longer, larger, more experienced BTC holders. And once this reaches these upper red values, this has always marked big peaks in the Bitcoin price action, not necessarily always Bitcoin cycle peaks. Like we saw just earlier this year, we saw a very red, overheated territory in this metric as we first reached about $73,000, $74,000. But now we're 30-40% higher than that. So it doesn't mean a cycle peak. Again, like we saw in 2017, the highest metric was actually a few months before the cycle peak, but we did have about 30-40% sell-off following that. So this definitely will be one I'll be watching going forward, especially once we start getting into these upper overheated regions. I think that would be a great indication that we're definitely getting towards the tail end of the cycle. But as of now, things look pretty healthy. We can stay in this orange, slightly overheated territory for multiple months. I mean, here in 2017, we first reached values like this in January 2017 before we topped out in December 2017. So we could be in these levels for a year still, and it still wouldn't necessarily mean the end of the cycle until we get these huge levels of profit taking to these upper regions. But one thing that will be interesting is the HODL waves, but my preferred iteration of them, which is the realized cap HODL waves. Rather than just looking at the percentage of Bitcoin held by different age bands, we can see their influence on the realized price. Essentially, if these red regions are becoming very high and overheated, then that means that new market participants, especially those of 1 month or less, are paying considerably higher prices than more experienced longer term holders in the Bitcoin price action. And if we just remove everything, excluding, say, the 1 to 3 months and below, we can see this historically marks market cycle peaks with incredible accuracy. Especially, I didn't remove that one. There we go. So 3 months and below, once this gets to these incredibly high, above 60% levels, that usually indicates we're getting quite overheated in the market. And right now, we're not really close to that. We're above 40%, but this still has considerable room to the upside. And again, like we saw in 2017, which in my opinion is currently our most comparable cycle, we surpassed this 60% value when the Bitcoin price was around $2,000-ish, and then we went 10 times higher than that. So these don't necessarily mean once we get to a certain level, that price is definitely about to top out. We need to look at multiple metrics for Confluence, and looking at all these metrics right now for Confluence, we're seeing that we still have plenty of upside room to go. Looking at the 1 year HODL wave, which has been a really key indicator to potentially see when longer term investors are scaling out, we can see that these have these huge stacked downtrends to multiple percentages lower than when they peaked at during Bitcoin bull cycle. So for example, here in 2017, this topped out around 61-62% before bottoming around 40%. In the next cycle, this was around 63%. Slightly higher before bottoming out at around 53%. And this cycle, this reached unprecedented highs of over 70%, the least liquid, the most illiquid Bitcoin has ever been. But now this has, of course, started decreasing to around 63%, still pretty much higher than what we saw in any part of Bitcoin's previous history prior to this cycle, but definitely an indication that people are beginning to take some profit. Bitcoin is moving, and long-term holders, they don't hold until it's too late. They'd rather start scaling out slightly early than any part too late. But I could still see this going considerably lower in terms of percentage terms. What else have we got? I feel like I've been talking for ages now. We've got the long-term holder supply, which I think is definitely an interesting one to watch as well. This is the amount of BTC held by these long-term holders, and I think is a really good indication once this starts dropping by a few million BTC that we may be getting close to a cycle peak. If I just hide the Bitcoin price action here, we can see in the 2016-2017 cycle, this was at around 12 million before it went to about 8.8 million. So we saw about a 2.2 million, no, 3.2 million BTC exchanging hands from longer term holders to new market participants. And it was a similar story, but not quite as extreme in the previous cycle, topping out around 14.3 million before dropping to, we'll just say, 12 million. So again, about 2.3 million BTC decline. So we usually see multiple millions of BTCs changing hands. Even in the previous rally we saw to the previous all-time high, we saw over a million, about 1.5 million really BTC changing hands. And now to our most recent cycle peak, peak on this data point, which was at around 16.1, 16.2 million, now to around 14.8 again. But for me, I'd probably be looking to considerably lower prices before I feel like maybe we've seen the max amount of transferring of BTC we'll see this cycle. To me, obviously, we can't do technical analysis on data points like this, but just looking at the percentage changes in this metric historically and how they've been slightly diminishing, I could probably see us reaching around here before we really start need to get worried that maybe we've seen probably the most amount of BTC transfer hands that we will this cycle, which would probably put this at around 13 million. So as we're about 14.8 million, we probably still have 1.8, maybe, that's just a rough estimate of course, million BTC left to be transferred. And considering we've already only seen about 1.3, 1.4, potentially depending on exactly where we're measuring it from, we still got plenty of room to go. Of course, in the latter stage of the cycle, this moves by tens, if not hundreds of thousands of Bitcoin a day. So this can happen very quickly. That doesn't got lost there. This doesn't necessarily mean that we're only X amount of time, we're only 50% of the way through the cycle, because the remaining 50% in terms of this BTC metric moving can happen in a tenth of the time it previously did. But just to finally finish off, I feel like, as I said, we've been going through so many metrics today. The hash ribbons look great. Miners are incredibly bullish. Whale shadows look pretty healthy. We're not seeing huge clusters of BTC being sold. We are seeing slightly more positive indications, the number of new addresses. We did have a huge sell-off over the past few months to some of the lowest levels we'd actually seen in years and years and years. Back here in June of this year, we saw 204,000 new addresses, which was the lowest we'd had since 2018, which was, I won't say concerning, of course, because there's obviously other means now of people getting access to Bitcoin. Maybe people are just buying MicroStrategy and other Bitcoin-derived products. Maybe they're going into ETFs or trading futures. Who knows? But this was slightly concerning to see, but now we're kind of up back into normal territory, having over 400,000 new addresses, which is very positive to see. And a more interesting chart is the Bitcoin addresses with a balance of at least 100 BTC, which over the past few weeks really has gone absolutely exponential to the upside, which kind of reaffirms to me who's buying 100 BTC at a time. These are going to be big institutions. This is going to be your Michael Saylors, your ETFs, your Coinbases, who are custodians for a lot of these BTC holders. The fact that this is massively increasing gives me some sign that this rally is mainly driven by spot institutional buying. We've actually not seen, looking at some metrics, one that I didn't cover actually, such as the short-term holder MVRV, we haven't seen the short-term holder realized price massively increase to indicate that we're having lots and lots of new retail coming into the market. This is mainly looking like wallets that are already holding a lot of BTC, adding to their BTC holdings. Of course, we're seeing a fair amount of profit taking, but the fact that this has been driven mainly by spot institutional buying gives us some indication that they're probably not going to be dumping at the first sign of a downturn. These are more experienced, sophisticated, if you like, investors. So I think everything overall looks very healthy. Of course, on the short term, we do maybe look slightly overextended. If we look at something like the short-term holder MVRV, we can see, just going to have to reload the page again, that we are kind of at a level where usually we do see some short-term profit taking. If I just draw on a line around here, usually we can see, if I just mark on the chart, we do see points of profit taking once we reach around this level, potentially slightly higher, where Bitcoin, a lot of new market participants begin taking some profit until we get to these big exponential cycle peaks, at which point it goes considerably higher than this. So maybe we have a little bit more of an extended cool off, which doesn't necessarily mean that price has to decline substantially, but just allow new capital to start flowing in, build a strong, solid foundation, potentially that $100,000 level to secure us into six-figure territory before Bitcoin can start rallying exponentially higher towards a bull cycle peak, hopefully well into 2025. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources, the many resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your number one source for Bitcoin analysis. So just to summarize, looking at a number of on-chain data points, so many on-chain data points, we can see that the market is currently in a fairly healthy spot with substantial upside potential likely remaining. Of course, if there's a black swan event or who knows what else that could randomly happen, these are impossible to predict. But looking at comparable levels to where we were in previous cycles, we're looking very healthy. We have seen, we can say, an increased amount of profit taking from investors, looking at something like the spent output profit ratio and the RHODL ratio, which maybe does indicate that we are getting slightly overheated, at least in the short term. But this definitely doesn't indicate that in the long term we should be anything bearish. Everything looks very bullish, and we're looking like we're entering the final stages of the Bitcoin bull cycle with somewhere between, who knows, 2, 3 to 12 months left of incredibly positive Bitcoin price action. And of course, it's hard to predict how irrational things may get and how long these things may take. But overall, looking at everything, taking every factor into account, we're looking good. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live chats, we must have gone through half of them today alone, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the current Bitcoin price action and market conditions. Are you incredibly bullish going into 2025 like I am, or are you maybe a little bit more reserved and looking to take a little bit more profit over the coming days and weeks? As I said, let me know down below in the comments and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.